Hey guys, Rafi here from the Endgame Investor. Today I wanted to show how stagflation destroys production, how rising prices of commodities causes rising prices of commodities, which is why you see at times just prior to financial crises, commodities spiking. Because when the price of one rises, the price of another has to rise because you need one commodity to produce another commodity. The difference between the 2008 financial crisis and this crisis is that back in 2008, there was plenty of policy space to move to tighten, to keep consumer price inflation under control, and to keep the Ponzi scheme going. Now, there isn't. So the next time that we have spiking commodity prices, which is around now, we're going to head into a hyperinflationary collapse instead of a deflationary collapse, which in real money terms is the same thing, because hyperinflation of the money substitute means that in real money terms, in gold terms, the prices of everything goes way, way down. As in a deflationary depression, the prices of everything in money substitute terms goes way, way down. Either way, it's the same result. Depending on what you hold, you're affected differently. So here's the article I wanted to discuss today. Title is European Industry Buckles Under a Worsening Energy Squeeze. Bloomberg, this is October 6th, yesterday, today is October 7th. European industry is being pushed closer to breaking point as the region's energy crisis worsens by the day. Power and gas prices are hitting fresh records almost daily, and some energy-intensive companies have temporarily shut operations because they're becoming too expensive to run. As winter approaches and Europeans start to turn on their heaters, the squeeze will intensify, pushing more executives into tough decisions about keeping plants open. There's the natural gas price in Europe. Now, these next two paragraphs are the key that I want to expand upon. Ammonia producer SKW something 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 is among those that's been forced into drastic steps. The German company, which burns through 640 gigawatt hours.
Gigawatts! What the hell is a gigawatt?
Of natural gas each year, equivalent to about 50,000 households, said today it will cut production by 20% to offset rising gas prices. It doesn't make sense. Here's the quote. Here's the key quote. It doesn't make sense to make ammonia at these price levels, said Chief Executive Officer Peter Singer. A complete production stop looms if the government doesn't act. So what did the government do? On Wednesday, the European Union issued a fresh warning and said it will outline measures, including tax cuts and state aid, that governments can use to help. The price shock cannot be underestimated, somebody else said. Okay. So what I wanted to emphasize here is, first of all, ammonia is used to grow food as fertilizer. And ammonia production leads to CO2 production, and CO2 production enables meat slaughter. So without CO2, without ammonia production, you have rising meat prices and rising food prices because you have higher fertilizer prices. The key line that this guy said, whoever this German guy is that it doesn't make sense to produce ammonia at these prices. Why not? Because the price of ammonia is not high enough yet. But if you cut the supply of ammonia, the price of ammonia will rise and it will become economical to produce it. But there will be less. The supply will be lower, which means less farmers will be able to afford the ammonia to grow the food. So therefore, the price of food is going to have to rise. In order to keep economic production going, therefore, you need food prices to rise faster than natural gas prices are rising now. Otherwise, all of food production is going to stop and everyone is going to starve. That's not going to happen. Eventually, you're going to have a monetary system that's going to allow people to eat. The problem is much, much less people are going to be allowed to eat or able to eat because they won't be able to afford to buy food at the price it needs to be at in order to keep food production going. The other point I wanted to make was that in order to keep the current economic structure running and ammonia being produced and therefore food being produced and CO2 being produced so meat can be slaughtered and sold in supermarkets, what the European Union is doing is handing out money so that basically borrowing from taxpayers. But why can borrowing from taxpayers happen to keep the current structure hobbling along? Because real interest rates are very deeply negative. So it's easy to borrow, especially for governments who are going to hand out money to ammonia plants to keep producing ammonia. But eventually, when interest rates rise, that is going to stop because the government will no longer be able to borrow money in order to finance the current economic structure. So that means we are going to be headed into a late 1970s, early 1980s scenario where rising interest rates cause rising prices, because with rising interest rates, you can no longer borrow from the government to subsidize production. So production is going to slow down, prices are going to rise as interest rates rise, and we're going to have a rising interest rate, rising price inflation scenario of the late 1970s that this time will not stop until the dollar and all fiat currencies completely collapse and gold becomes money again. This is Rafi of the Endgame Investor. It's probably a good idea to grow some food in your backyard.